You're watching today's video technical update presented by FX Times. It is Thursday, March 11th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. Let's follow up on the pound-dollar pair, which was still in correction mode since yesterday's session and may soon form a double bottom. The dollar Swiss franc looks to be forming a rounded top but has yet to break an important support. The Aussie has been stronger than its counterpart, the Kiwi, and the Aussie-New Zealand dollar pair is nearing a upswing projection. This video is being produced at about 3 p.m. Eastern Time near the end of the US trading session. Here's a look at the pound-dollar pair. Yesterday we started our video here after this reversal candlestick pattern, and it took some time in the Asian session, a quiet Asian session, until the European session got underway when the market rallied. So the pound-dollar pair is looking to continue rallying, but is doing it in a very laborious manner. Now looking at the daily, we see that we might be developing a double bottom, and the only way we could tell is if in the 4-hour time frame the market breaks above this 1.52 and preferably above 1.53 as well, and is able to have a throwback to confirm, or at least a bottom that's higher than this previous bottom, then we may be in a bit of a reversal here. But this is still, too early to assess that. Outlook. We continue to be bearish, but still looking at in the bearish mode, we see that our next target would be 1.45, 1.44. But if the market does rally and break above this declining trend line, the market we see here can actually go to the 1.57 area. Okay, now once this materializes, then we can start considering a more long-term bullish outlook, but still that's very premature, but we do still want to take a look at it just for anticipation. Now here we see the market here rally from this bottom here, and now the market has retraced 61.8% here at 1.57. If the market didn't break it, we had a chance to continue consolidating and maybe break on top. But after a break to the bottom, our swing projection from this swing onto this swing requires us to basically rally past this consolidation area. So that's a very long-term outlook and requires a lot of confirmation. Right now all we have is the market decelerating this decline, and maybe we will have some short-term reversal before considering this long-term continuation outlook. So looking here, once again, if we do have a double bottom and the market breaks this declining trend line, then the market may be retesting this 1.5657 area. Okay, but like I said, the market is still bearish. As you can see in the 4-hour time frame, our moving averages tell you that it's very bearish, so look for topping action around this area and look for the market to continue declining towards the 1.4445 area. The next pair is the dollar Swiss franc pair, which has been in more or less sideways consolidation, but with a slightly rounded top here. You see the top peaked here as the market approached 1.09, but the tops you see here, consecutive rising tops, and then here declining tops. The bottoms as well, they were rising here and then started to decline here. So the market now is testing this 200 simple moving average, and you see the 50 simple moving average also closing in, and looks like it could cross over if the market continues to decline and break out of this rounding action. We also see in the momentum that the market is bearish because of this inability to get to the overbought zone, but the market dips down to the oversold zone. So overall the market momentum is bearish and looks to have a correction. Now looking at the daily time frame, a correction could come down here to the 50% and 1.05 area and see support there. That's an important support where the market would be testing a confluence of different different levels, such as this moving average, 200 moving average, this 50% retracement of this swing. If you look at the bigger swing itself, it's 38.2%, and it's also going to be coincident with this rising trend line. So this is a very important area to confirm the market's overall bullish mode that it started here. If not, then now let's look at the weekly. We see that the market has completed somewhat of a Gartley, and so if the market declines and actually breaks below our support, this trend line and this rising trend line, then the market is poised to continue to decline, and I might throw a swing projection such as that, okay, to the parity and maybe a little below that to test this previous low here. Okay, so that's the couple scenarios, all dependent on what the market does at 1.05, if indeed this is a rounded top with a correction. So look for bottoming action there, or even a little bit lower at the 1.04 area, and if the market supports that, then we may actually have another swing projection upwards to retest this previous power line here at 1.11 or 1.12. Okay, so that's the two scenario. 1.12 to 11.12 to be the bullish outlook, and the bearish outlook to the parity and 0.99 levels. Here's a look at the Aussie New Zealand dollar pair. We see that in 2009 it was pretty much a sideways action with a slight declining channel since April, May. So the Aussie dollar towards the end of the year started to rally, had a little correction here. You see this sort of three-wave rally, this sort of two-wave decline, and then now another possibly three-wave rally as well. So for the moment, this swing projection puts us to the 1.3250 area. So the market is about a couple hundred pips from the swing projection, although it is overbought, but the momentum is still intact and very strong. So that's the daily time frame showing you the swing projection, as well as you see this previously broken top here tested as support. So the market looks poised to continue rallying. Now looking at the 4-hour time frame, we do see that the market has been in a little consolidation, and we do see that this consolidation was a little throwback to test the previous highs, and it after the 61.8 retracement to the 1.29 area, the market is continuing to rally. So the market right now looks like it has a little trouble breaking the 1.31 area, but we'll see. It's at the end of the trading session. We'll see in the Asian session and the European session whether or not a rally will occur. Now a rally, if we do hit this 1.3350 area, we basically have sort of a butterfly pattern, and there looks to be some resistance there. So if there is resistance, if you do see some topping action, go ahead and use some intermediate and also your short-term trend lines, and look for a break of the short-term trend line to test your intermediate term trend line. If that breaks, then you have a intermediate to long-term bearish outlook. For now, you have a short-term bullish outlook within an intermediate term. Short-term bullish outlook within an intermediate term bullish swing. So looks like the next couple of sessions we'll see this projection materialize. Okay. Otherwise, we do have an overbought area. So if the market does already have trouble breaking the 1.31 area, if it does break this fast trend line, then you might have to switch to the bearish mode right away, because we do have a completion of a bearish butterfly. That's it for today. Visit fxtimes.com for more fundamental and technical updates, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.